Um, every single crisis recruits a new class of Bitcoin believers. There's just a delay in between the crisis and the Bitcoin rally. For example, in March, Bitcoin crashed with everything else down to like 4,000 or 4,500. And I started buying it in the 9,000s or the 10,000s. And I remember when Bitcoin was 10,000 and the NASDAQ was like 12,000. Then Bitcoin would rally up and rage, and then there would be a crypto crash and it came down. And on the other hand, here we are today, and Bitcoin's like 96 or 97,000, and NASDAQ 17,000. The near-term reaction is always the market cramps and everybody sells everything. But the long-term reaction is, if I had all my money invested in Bitcoin instead of invested in that company, I wouldn't have been affected by tariffs. And so what you have is a reallocation of portfolios to being more Bitcoin, less the other thing. People are thinking now, if I had more Bitcoin, less gold, I would have made a lot more money in the last 4 years. If I had more Bitcoin, less big tech, I would have made a lot more money. If I had more Bitcoin and less that bond instrument, I would have done better. These are teaching moments, right? And in any macro panic, the most liquid, leverageable asset is Bitcoin. Bitcoin is the only thing that you can sell, the only thing you can short 50x on Saturday morning. So when people panic on a weekend or an evening, it's going to be volatile and it will correlate for a short moment with other assets, but then it will bounce back and break that correlation higher. That has happened consistently for the past 15 years, and it's happening right now as we watch it.